friends, Alicia Perez here with Palm Beach Real Estate News. I'm here today with Doug Shelton from Liberty Tax Service. Doug is a CPA and has over 42 years experience doing taxes for people and realtors like myself. So we've invited him here to ask him a few questions about what he does and how it helps us.
Thanks for inviting me, Alicia. Glad to help.
Okay, Doug, and your first question today. What should your tax return show to be eligible for a home loan?
Well, in general, bankers look for tax returns, 3 years worth of tax returns, but it's not what it shows so much as how much income that you have, because they're looking for your ability to repay the mortgage, make a down payment on the house, and maintain it.
Right. And then what are my tax benefits for owning a home?
Okay, good question. Owning a home, you probably have a mortgage and you pay real estate taxes. Those kind of form the foundation of your itemized deductions. You add charitable and medical on top, and if that exceeds the standard deduction, you use that to lower your tax instead of taking the standard.
That's some good news right there. And another question, does age or materials, location, zoning, energy efficiency, appliances, does that affect the tax?
Well, it does affect the value of the house and the real estate tax that you end up paying, but it doesn't per se help you lower your taxes. There is a credit for an energy efficient air system, water heating system, solar energy, but those will begin to fade out, and many people just don't afford one of those things. But
now, some questions for realtors specifically about taxes.
okay.
As a realtor, which I am, should I incorporate myself for tax purposes, and what would be my benefit for doing so?
Good question. My favorite subject. Any successful business should at least consider incorporating. Yeah, there are benefits in that, for example, a sole proprietor or partnership pays tax on the income. It also pays self-employment tax, which is the second layer of tax. A C corporation, IBM, AT&T, the big ones,
Right.
they pay tax on their profit and then turn around and distribute that profit to shareholders as a dividend, and the shareholder pays the tax a second time. Now, in between all of that is the LLC S corporation. An S corporation is sort of a second layer on top of the type of entity that you create, but it's not subject to income tax itself. The profit gets taxed in your tax return, and it's not subject to self-employment tax, thereby saving more money.
Right. Now, am I being taxed as a person or a business once I've incorporated?
The business is the entity that's being taxed. However, depending on the level of the entity type that you choose, LLC or C corporation or partnership, you may pay tax on your personal return, or the entity pays the tax. Okay, a C corporation, it pays the tax. The others do not.
What kind of expenses can I deduct or should I deduct? And is there anything I should not try to deduct on my taxes?
Good question. Ordinary and necessary business expenses, no matter what their kind, are deductible. However, on the other side of things, on the ridiculous side of not being ordinary and necessary is, for example, something I've run across, somebody trying to deduct a Rolls Royce for the delivery of bread or bakery goods, or wearing charging off a suit, $1,000 suit in a plumbing business. It borders on the ridiculous.
Yeah, I can see
You
where
get the
that
picture.
wouldn't really fly with certain businesses. Well, thank you so much, Doug, for being here with
You're
us
welcome.
today. And this has been Alicia Perez with Palm Beach Real Estate News. Please follow us on Facebook, facebook.com/Perez Real Estate, and subscribe to our YouTube channel, Palm Beach Real Estate News.